Hi, everybody. John Haldy here, and I got David Cooper with me. And we are excited to have Schwanda Flowers with us. Schwanda is a managing director at First Financial Bank in Arkansas. Welcome, Schwanda.
Thank you. Thank you for having me.
So, Schwanda, David and I were really excited to have you because I know that the bank you're working with is eager to place loans in the transportation industry. And for our purposes, you're eager to do so with Linehaul Contractors. And you've got a wealth of experience there. And we were hoping we could pick your brain on a number of topics because the lending side is kind of a mystery for a lot of folks in our community. Um, Even though you guys talk about being open and upfront, the whole underwriting, the SBA thing, there's a lot of complexity there. And many of our folks don't get to experience that on a regular basis, whereas you live in it day to day. So, with your permission, do you mind if we just hit you with a bunch of questions and see what we can learn today?
Absolutely. I love that.
I'm so excited about this one because it's Schwanda. I've had a few conversations with you in the past, but right, I've learned it from working in other lines and going through other working with banks before. If you can find a loan officer of a bank that understands the project you're doing, right? I have a guy locally here that he gets some things that my brother and I've gotten into, and working with him to find financing and him to find partners that work with us. It just things work smooth. And there's so many contractors, so many line hauls, really just any contractors in general in the space hauling for carriers that are looking for this. So to pick the brain of an expert in this space, super excited for it, and I hope or think the cast will be too. So Schwanda, I hope I'm not putting too much pressure on you today, but you're one of the few what we found, right? John and I are on this quest on a mission to find banks around the country that are experts in this field that understand the line haul model. And I don't know that I've found one yet that kind of understands what contractors are facing on a daily basis better than you do, and is really to really step in and be a partner to us. So let's dive in. Let's go.
Yeah, that sounds
Let
good.
me start with some basics because I want to make sure I'm on the correct page here. SBA loans are somehow government backed, right?
That's correct. They are government. They have a government guarantee.
So why is there even an interest cost? Because if it's guaranteed, I mean, or are they not guaranteeing all of it?
That's correct. So they don't guarantee all of it. Depending on the size of the loan, they guarantee 75%, 85% of the loan. So the due diligence, though, is still on the bank to be able to liquidate what assets are there if the loan defaults. So we are not free as a lender from all of those duties of trying to recoup our money for the loan initially. If that can't happen, then SBA, the government, steps in and will make good on that guarantee up to, in most of line haul loans, it's going to be 75% guarantee.
So forgive me, I want to walk through an example, make sure I got this. You loan a contractor $2 million. Things go sideways. And at the end of the day, the bank only got $1 million back after doing whatever process and liquidating the company or whatever. So there's $1 million loss there. Are they covering all of it because they would do up to 1.5 million and you didn't get there? Or are they covering 75% of the loss itself?
They're going to go up to that 1.5 million. So whatever we were able to recover, then they're going to make us whole up to the 75% of the total loan.
So from a bank's perspective, does that make it easier to get an SBA loan than a traditional loan?
Well, so that's an interesting question because SBA loans are typically a great loan product when a lot of the collateral is intangible. So in the cases of a line haul, contractor, and they're either acquiring routes or maybe expanding on their current, business, those routes are intangible. So there's not a lot that we can do necessarily to liquidate that, right? So we've got some tangible assets in the vehicles, in the trucks, but that's usually a very small portion of the loan. So that's why SBA is a good fit, because there's really not a lot to liquidate. If they lose a contract, that's just gone. I can't sell that contract. And so that's where those losses come in. And that's why an SBA loan product is really good for any type of business where the value is heavily weighted in intangible, goodwill, blue sky assets.
And am I correct in thinking that SBA loans will always have a personal guarantee?
That's correct. Yes. So you are still required to personally guarantee a loan for an SBA loan. We're also required by the SBA to look at personal collateral. So a primary residence, rental properties. We don't dive into small collateral like, a vehicle or a boat, things like that. So we're looking for, larger pieces of collateral. Typically that's going to be real estate. We are required to look at your personal real estate. We're required by the SBA to do that.
And are SBA loans typically more expensive or less expensive than a traditional loan? Or is it not a fair comparison?
Yeah, so no, that's a fair question, because one of the biggest costs associated with the SBA loan is that there is an SBA guarantee fee, and it's a sliding scale fee. But let's just say it's about 3 to 3.75% of the total loan amount. So that's a pretty hefty fee to pay so that the government will guarantee that loan and banks feel comfortable lending on a business where there's not any tangible collateral. So SBA loans require a smaller down payment than conventional loans. So that also increases the risk of the bank, hence the need for that guarantee from the SBA. And so a lot of those things go into play when you're thinking about, should I look at a conventional product? Should I look at an SBA product? Conventional product is going to be cheaper, probably a slightly lower interest rate. It will require a higher down payment typically. But if you're able to do that and the bank is willing to do that, and you've got some collateral to put up, a conventional loan is probably cheaper in the long run from a fee perspective and from an interest rate perspective. But in many businesses that are this heavily weighted in goodwill, conventional loans are not always an option.
And do SBA loans have to be floating rate or can they be fixed?
So they can be fixed. It's really up to the lender how that works, and it's a matter of what the market looks like right now, what's going on in the industry. But most SBA loans are going to be variable interest rates, so they are going to vary based on prime. So whatever the prime interest rate is, an SBA loan is typically priced prime plus a spread.
Okay.
Can we back up a hair? Because it's a common argument that I've heard from contractors around the space, and that is when they're going SBA or going conventional, and you kind of got there that a lot of times with SBA, everybody makes the argument that you got to sign your firstborn away. You're putting up everything under the sun that you got. If you own anything, it's getting signed as collateral against the note. You could piecemeal together traditional financing, potentially at lower rates, by saying, okay, I got a boat free and clear going after this, or you say you don't go after small, but you've got a rental property free and clear. So go take conventional financing on the rental property to do what you're doing in your business. I know there's risk in that also. I'd love to hear your perspective and how you work with clients to decide what's best on their future of, hey, break down the going conventional route versus going SBA route. And if you're pushing SBA one way, I get the benefits of that. But I think that's the argument I hear from contractors all the time, is that if I got to put up everything against the note anyways, I'd rather not have it tied up there. I'd rather have it chunked away in smaller pieces in case I want to pay it off early, or in case I wanted a multitude of reasons.
Yeah, no, it's a very interesting argument, because with conventional loans, you kind of have to sign your firstborn away also. So
agreed. Agreed. So that's the thing, is that they want I think it's that they want the freedom of like the multiple or multiple personal loans, because and maybe it's different with your bank than others, but others and myself have had issues with, releasing one piece of equipment or one piece of collateral tied with a large note versus having a bunch of individual smaller conventional notes for each individual piece of collateral.
Yeah. Yeah. So, and I think that that's fair because in this space, as you guys know, trucks break down. You need new equipment. You need to get rid of things. And so, that is sort of a constant revolving door of, hey, Schwanda, I need to release this piece of collateral. Hey, Schwanda, I need the title on this truck because we're selling it for parts.
Yep.
We had a wreck and I think, that's just the cost of doing business on our end. And typically a lender shouldn't have an issue with releasing collateral when things need to happen in the business. And so there are ways to do that. I mean, obviously, as you're paying down your loan, you have less debt. And so that collateral can be released, as you do that. But yeah, typically you're going to be doing a personal guarantee. You're going to be putting up collateral for a conventional loan. Unless you've just got a really special relationship with a lender, who knows you well, which I encourage people to do that and have that. But you're typically going to be putting up any sort of tangible assets that you have anyway on a loan like this. So, SBA requires that we look at that personal real estate. And beyond that, we really don't have to look at other personal collateral other than, the assets that are associated with the business. So the trucks that are involved with the business, essentially. So that would be what we were, releasing and getting the titles and doing those things. If you have an SBA loan and, you've acquired a business and you've decided to sell your home, you want to move, you want to do, those are conversations you should be able to have with your lender. There are ways to do that. There are ways to release that collateral, potentially come back if you buy a new home and add collateral, pay down the loan a little bit. But there are definitely options to make that work. It should not be a deal breaker. But I do know that that's a concern and a conversation that you need to have with any lender, regardless of what type of transaction you're doing.
I think it's where there may be more or louder or whatever you want to call it, but the flip side, the conventional lenders out there are all, well, here's what's scary, here's what's bad about an SBA, and it's so I love to hear, okay, well, here's the benefits, here's the good, here's the flip side of that argument.
Yeah, yeah. The best benefit, I think, is that you can keep more cash in your pocket. So with an SBA loan, if you only have to put down 10%, okay, if it's an expansion, you might be able to put down 0. And then if you have a seller who's willing to do a seller note with certain terms that fall in line with the SBA requirement, those can also be used for a cash injection. So one of the big benefits with SBA is that you can hang on to a little bit more of your liquid cash and keep that in the business and still move forward with the transaction.
Schwanda, I did a little research, and I could be off here, but I think there's about 4,500 banks in the U.S., right? What's interesting to me is if I took all of the SBA lenders that I'm aware of that like lending to Linehaul Contractors, right? I could fit them in an RV to have a meeting. Like it's a few dozen at best. Why do most banks not want to lend in this space? And what do y'all see in it that they don't?
Yeah. So, before we got into this space, we did a lot of research on the industry. What does this look like? What is the cash flow? How many people default? Why do they default? And we had a serious due diligence process about, is this even a space or an industry that we're interested in specializing? And so I think to answer your question, one problem is, if you're an SBA generalist, so, as an SBA generalist lender, lending from, a retail store to a restaurant to, a logistics contractor to a healthcare, a spa, whatever it is, you're looking at different financials every day. You're looking at a different business plan every day. And it's very difficult to truly understand how any specific industry works. And so an industry like this, Linehaul Contractors can look a little scary, right? So, okay, you've got typically one big customer that you're contracted with. You've got trucks that break down. When we're talking about the line haul space, there are a lot of differences in trucking companies or transportation service providers that are independent contractors. All of those business models look different, and so a lot of lenders, just don't understand or haven't seen enough financials, haven't looked at enough deals, so that their underwriters, or their loan committees are comfortable with it. Fortunately, we have been in healthcare spaces that are also very heavily weighted in goodwill, intangible, blue sky assets. And so this was really kind of, I guess, as easy as it could be, from a banking perspective, to really do some due diligence and look into it. We enjoy the space. The cash flow is good when it's done well. And so we really focus on lending to good contractors who have good experience, a good team around them, who have also done their research, and have educated themselves about how to own, operate, and be successful in this space. So we spend a lot of time looking at the borrower, and how comfortable are we that they can be a successful contractor. So that's a really important part of our process. And a lot of lenders don't have time to do that either. If it's an online application process and you're kind of churning through SBA applications, that's a little bit of a different feel than having a conversation with each applicant to see where they are, who they are, look at their resume. And so I think it's just a different approach. And our bank has become very comfortable in this space and is building a really strong, successful portfolio.
Can I ask you a question going through my head as a ex-contractor?
Yeah.
What's that process look like, and about how long would it take, right? The issue a lot of guys run into this space is that when these deals go up, and I say deals, right? You see, I'm going to say a listing for sale, a acquisition opportunity versus a deal would be two different things. Deals are, hey, it's a good price. We know it's a good lane. We want to buy it. When those pop up, when a deal pops up, gone, right? You got to be ready to buy, and you got to be ready to buy now. Is there a way for me, not me, as someone, as me, Mr. Contractor, to be ready to rock and roll with you? And what do I need to do to work with you? What do I need to present to you to where I can go into these deals and say, yeah, First Financial's got my back, and I can put in my bid, and I'm comfortable bidding this because I know money's in the bank, and as long as the seller's presenting what they say they're presenting, that we're going to be able to make this deal happen.
Yeah, I think it's all about relationships. And so, you said earlier, you and your brother, have a local person that you have a relationship with who knows you, knows the business that you're in, knows the kind of deals you're looking at. That shouldn't be any different in this space. And so, I think one of the biggest mistakes that you can make in any industry is finding a deal and not being prepared or knowing who to call, and not already having developed that relationship, so that when you call and say, hey, Schwanda, I've got a deal, it's probably going to move fast. What do you think? And then we can start that process very quickly. So having conversations with lenders about, this is the kind of thing I'm looking for. This is what my current financial situation looks like. This is my target, maybe price point, or my target size, number of routes, number of trucks, those types of things, so that I already know. I already know what you're looking for, who you are, what type of business you're in, what experience you have, what conferences you've gone to. I ask all of those questions. Who's your team that you built around you, so that you're prepared, because then things can move very, very quickly, because those conversations have already happened. And I would say, frankly, I have phone calls every day from people that are like, hey, I'm looking at this deal. What do you think? And then it may or may not happen, but that's great. Let's have those conversations, because it really is about relationships. And so I think that that's what's important. Go ahead and send in your tax return, send in your personal financial statement. Let us know that you're looking, you're actively looking, so that when a deal pops up, because they do go very fast, you're right. If you're not prepared to put in an LOI and have a reasonable, kind of confidence that you can get the financing, it's going to pass you by. They go really quick.
Right. It's people are almost making it trying to be like a real estate term where you can go out and you can get pre-approved for a mortgage, right? People are wanting a pre-approval letter, and I'm like, it doesn't work that way. With you're not going to get that. But I think from a operator side, right, it would be good to go to a bank and be able to present, hey, this is my current financial situation. Here's what I'm looking to do. Can you tell me, right? Can you give me a ballpark idea of, is it going to be yes or is it going to be a no? Because, and how long would it take for it to fund? Because that's ultimately the answer that every seller is looking for.
Yeah, absolutely. Absolutely. And, typically the process is not, if you're working with a preferred lender with SBA, the process doesn't take that long because underwriting is done in-house. Okay. So the underwriting process, especially if you have underwriters who are also used to looking at deals, in this space, it goes much faster, right? So they understand the financials, they've seen the tax returns. I mean, all of those things go quickly. And so really it should not be a very long process if you've already started those conversations and have that relationship. But if you're kind of starting cold and you have to learn one another and, figure out your personal financial situation, and do you have cash to put down? Where is that coming from? What's your ideal situation, possibly with a seller note, built into the financing, or you've got a stack of cash you've already prepared. What is your situation? So if your lender already knows that, it's going to move very, very quickly. Having that conversation to say, okay, you're going to have 10%. Do you have that? So if you do, or if you have X amount of dollars, cash on hand, well, then that may tell you the size of the deal that you need to be looking for. And so that also educates you as, a potential borrower looking at these acquisition targets to know, okay, maybe I don't need to look at the $5 million deal. Maybe I need to be looking at this $2.5 million deal. And so those conversations can also prepare you as a buyer to say, okay, then reasonably my acquisition target is, X amount. We don't do pre-approvals because the approval is based on the business. Right? So the borrower is important, but there's not an approval if there's not a business to look at. So we have to focus on the cash flow of the business. I mean, that's the critical piece of the approval. Even though the borrower is important, if the business isn't cash flowing, you're probably not going to be able to get financing.
John, you want to ask questions, but I want to make sure we come back to this pre-approval thing. I got the head's exploding now.
Yeah. I understand generally that when a bank's doing underwriting, they're going to look at the business that they're underwriting, and then they're going to look at the person and their personal collateral, right? Is it possible to say that with an SBA loan, and this could be totally wrong, so correct, with an SBA loan, there's more emphasis on the personal collateral or less emphasis on it, or it's less looking at the business or easier to get the business approved than traditional? Like how much does traditional loan weight personal versus business, and how does SBA do that? Is it the identical one, or does the bank have a different view because of the government guarantee?
Yeah, so the bank definitely has a different view because of the government guarantee, and it should be easier. So when you're thinking about traditional lending, conventional loans, they want 100% collateral, and that's usually tangible collateral, right? And so that's where it can be very difficult. I mean, if you're looking at a multi-million-dollar deal and you don't have real estate, you don't have some liquid cash that you can use to put up, a conventional loan may be very tough. So that's why SBA loans are a really good fit for this industry. So, and I guess maybe and repeat that again, because I may have kind of missed the question.
Well, I just had this strange hypothesis that with an SBA loan, there's a little more emphasis on the personal collateral and a little less emphasis on what the business is. Is that a fair statement?
Actually, I would probably argue that it would be the opposite, because with an SBA loan, although we're required to look at your personal collateral, okay, if you don't own a home, let's say you live in Texas with a homestead law, so we can't take your personal home, okay, you can still get an SBA loan, 10% down, no additional collateral. And typically what we do to finish collateralizing a loan with an SBA loan is require life insurance, probably also required with most conventional loans as well. So it's almost the case with SBA. If you have personal collateral, we're going to use it. But if you don't, it does not automatically disqualify you from being approved for that loan. Whereas on the flip side, in a conventional, kind of space, it might disqualify you from having a loan if you didn't have any additional collateral to put up. So
You
think
just
about it
said
that way with SBA. Like if you have it, we're going to use it. If you don't have it, that does not necessarily mean that you won't get approved at all because of that government guarantee.
you just hit on something that I know it's going to be talked about again at the summit here coming up next week. But and I believe, Schwanda, we had a brief conversation about it. Both Roland Brewer gave a talk at I think it was the Houston Safety Stand Up back in November, um, about life insurance and how the policies can not only be used to protect a company but also propel a company, and set up a company for future successes. And it was all in part of this, with using those insurance policies for loans and this collateral for the notes. A whole complete interesting side of the business that if we want to dive into, we can. But if not, I know that just for if anybody's interested on that, it is a topic that is definitely blew my mind as an entrepreneur and business owner when I was opened up to it.
Yeah, absolutely. I'm definitely not an insurance agent. Insurance is complicated, and when we kind of have a list of people that you need to have, on your team, in addition to consultants, and people that are going to help you optimize your business, right? You need to have a great insurance agent, a great attorney, and a great accountant. And insurance is critical. Obviously, as we know, unfortunately, accidents happen in this space. We have breakdowns. We have, workman's comp is huge, from an insurance cost perspective. And then you're going to have life insurance, which is typically going to be required as collateral on a loan. And really, even if it's not, you should have it to protect yourself, and protect your family and your loved ones and your business, in the case that, anything does happen. So having an insurance agent is absolutely critical. And oftentimes it's interesting, the thing that will slow down the loan closing process the most is life insurance. And, people assume that can be done quickly. It is a long process. It is required on all of our loans. And if you don't have that done before closing will get delayed. And that's very disappointing for everyone involved. And so we always encourage people, immediately when you get that approval, you've got to have, your insurance agent ready on speed dial, let him know what you're doing, what you need, and get that ball rolling.
Is that an SBA specific thing, or should they expect that in traditional loans?
Most traditional loans will require it also. It's very typically required, but for SBA loans, that is one of the ways that they allow us to finish collateralizing a loan. And so regardless of your personal collateral, as you were saying, it's heavily weighted in personal collateral. We use what you have. Okay, we're going to take it if you have it. But then outside of that, we're going to use that life insurance policy to finish collateralizing.
Fascinating. I had no idea.
Learn something new every day, John.
What are some of the misconceptions or mistakes that you see people who approach you looking for loans that disqualify them? What are some of the things you see patterns of that people should be aware of?
And so I think not protecting your personal financial situation from a credit perspective. So, a lot of individuals will come and, if you've got a bankruptcy, that's going to cause a problem with financing. If you have a ton of credit card debt, revolving debt is a problem. If you don't, haven't, really paid attention to your kind of liquid cash situation, where are you going to get the down payment from? And that's important. And so a lot of people just aren't prepared, because they think maybe I can get 100% financing and I'm not prepared to put a down payment. Is that still okay? no, it's not going to be okay with conventional, with SBA. I mean, you're going to have skin in the game. You need to prepare your personal financial situation, because you have to look good as a borrower, right? I mean, we have to be confident that not only can you run this business successfully, but that you are committed to paying your debts back, right? And so, if you can't pay the loan back, I mean, you're not successful. We're not successful. So we don't ever want to set anybody up for failure, by loaning money on a business that does not have appropriate cash flow, for the deal size, or loaning somebody money where they have zero to fall back on, right? So if you have $100,000 in the bank and you're putting $100,000 up, as the cash injection, and you don't have another source of income, I'm probably setting you up for a tough time, right? And so, we really want to look at that, and I want to be sure that we're setting, all of our borrowers up for success. It's not just about closing as many loans as we can. It is about having successful borrowers who come back to us for more loans, right? I mean, that's what we want. We want you to be so successful that you come back to grow.
Yeah, you just said that the businesses need to have really good lawyers, really good CPAs, really good insurance agents. I think you have proven here that they need really good bankers also, and I think that, in my opinion, being an entrepreneur, being a business owner for the years I have been, that what makes an entrepreneur, or at least in my eyes, a good banker, lawyer, CPA, insurance person, is someone who is interested in helping you succeed in your business, right? Not just about giving you a note or writing you this, or closing their deal and hitting their quotas, but they're truly interested in what you just said and helping you grow your business so that you keep coming back for more. And I think that's what's so important as an entrepreneur, as a business owner, to find in both team members on your team who are working with you, but also team members and your vendors in the workplace that you have to bring in, is surround yourself with a group of individuals who are on that same mission, on that same goal as you, and know it. Be open with them. Hey, this is where I'm trying to go, and make sure that they're the people that are going to help you get there. And it sounds like those are the people you're looking for, and you're not willing just to write somebody a note knowing they're going to fail, because at the end of the day, that's bad for you too.
Yep, that's exactly right. That's exactly right. So, if I have a customer that's late on a payment, I get a phone call from the bank, me. So, and our structure is maybe a little different than other banks. So it doesn't go to a different department. They're coming to me and saying, "Hey, Schwanda, why can so and so not pay their bill? Their draft didn't go through, or what's the problem?" And if I have a contractor who is kind of falling on hard times and coming to me saying, "Hey, can I get some relief? Can I get a couple months, deferral on my payment?" That's me dealing with that. And so, I want to be sure that, I'm not setting people up to call me with that concern all the time. And things happen, obviously. And, the economy is a crazy thing. And, there are lots of things that are outside of our control. And when those things happen, we want to be here to help. But, putting somebody into a situation where, I'm looking at the financials and I'm thinking, there's no way that, they can cash flow this business and service the debt. I'm going to tell you that. I'm going to tell you, here's the math. It's all about math, right? So here are the numbers, and here's what I'm seeing, and based on the type of routes, and based on maybe growth in that terminal, based on the different things that can go on. I don't see what you're seeing. Let's walk through this. Let's talk about this, and let's talk about the cash flow that's available to service the debt, and how much is that debt. So, what is your monthly and annual debt service to me going to be? Do you really have your head wrapped around that? Is there a seller note? Okay, well, let's talk about that, because when that kicks in, now you're servicing my debt, you're servicing the seller note debt. Do we feel confident that there's enough cash flow in the business, to be able to service both of those, and for you to pay yourself, and be a successful entrepreneur and make some money, right? I mean, the reason we do this is to make money. So it's not a charity. We're trying to make money here. We want to be successful owner operators, business people, and part of that is that we can make money and have great lives.
So I think you answered what I was excited about earlier, where I said we got to come back to this pre-approval spot, right? You said you can't make it happen from a borrower side. If I've got a set of routes, can I come to you and say, hey, here's my business, here's my books. Can you pre-approve, quote unquote, up to a certain amount of a note if the borrower would meet your credentials?
Yeah, I think in that case, and I would love that. I mean, I love for a seller to be prepared. And so, that's one thing that we kind of, harp on is that if you are preparing to sell, please, 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 be prepared with your financials. Have your settlement statements, or, certain quarters, whatever we want, to share. I mean, we don't have to have every single week, for 3 years, obviously, but have your financials in order, have your P&Ls in order, know your truck list, we need employee lists. We need, what are your managers doing? I mean, have your financials ready so that we can really take a look at your business, understand your growth. If you had some organic growth, what are your routes looking like? I mean, and so those are really important factors. And so if a seller does that, we can absolutely look at the business and you could say, hey, here's what I'm thinking about a sale, for a valuation, right? So here's what I'd like to get for my business. We can run the numbers and say, okay, so if somebody is going to pay that price, they have, let's assume they're going to have this much as a down payment. Let's assume they're going to need some working capital. We can put together sort of a project breakdown, and say, okay, so they would be looking at a total loan amount of X. That's going to be a payment of this. Okay. Does your business have sufficient cash flow? Because if not, you're probably asking too much, right? Or it may be a situation where then you say, okay, Swanda, what if then I added in a little bit of a seller note? How would that help, the situation? And we can run those scenarios. And then you're really much better prepared when you're trying to market your business and you find, somebody that's interested in doing the deal and doing it quickly, because you also have a really good idea of, what your business might value at, what that loan might look like. You're going to have a much better understanding from the borrower's perspective, what they're looking at, what they're going to need to service.
I'm going to change gears for a minute, David. I know you're dying to dig further into that, but I'd rather not do it publicly. What's some of the ugly stuff with an SBA? Like, for example, it's typically a 10-year loan. Is that fair?
Yes. So
If
10-year term.
if I take out an SBA loan for 10 years and things go so well that 5 years in, I'm ready to pay the whole thing off, is there a penalty for doing that?
No, there's no penalty. With longer term SBA loans, so if real estate's involved, some of those things, there's a penalty if you're over 15 years, a 15 to 25-year note. But with a 10-year business loan, business asset acquisition loan, or a refinance of debt, those are also 10-year notes. There's no prepayment penalty.
Is there a ton of extra paperwork through the life of the loan that I need to know about compared to traditional?
No, I mean, through the life of the loan, what we require, and different lenders may do it a little bit differently, but I think as a general rule, what the industry expects is that you provide annual financial statements. We want to look annually and see how you're doing, and we're going to keep tabs on you there. But there's really not paperwork that would be different with an SBA loan than a conventional loan from a loan servicing perspective. So after closing, I think before closing, there are a few extra documents, right? So there are some specific SBA forms. There are citizenship requirements. There are, what's called an SBA 1919 that really talks about the use of proceeds and beneficial owners of the loan. So there are some specific SBA forms, but those are not difficult. And the lenders can walk you through how to fill that out or, help you with some of those forms that might not be as intuitive.
Any
Sure.
other questions that are popping to mind? This has been phenomenal to learn this much so fast.
You derail me and then you come right back to me?
But what I didn't expect, which I wasn't thinking about, but it's so obvious now that you said it. If I'm in, I don't know, make up a town, Spokane, Washington, and I go down to my local bank because they're an SBA lender. I didn't realize that more than likely that banker that I'm talking to is an SBA generalist who's trying to sell SBA loans to lots of folks in Spokane. And that's why they don't get their heads around this business model. Whereas you're sitting in Arkansas somewhere, right?
Yes.
And you cover the nation because you're laser focused on this. You're not so much interested in dealing with everybody who walks into the branch and just says, I want a loan. You're out there looking for Linehaul contractors.
That's right.
That's why there's so few in our pocket, because everybody tends, I'm guessing most SBA folks are generalists in their geo area.
Right. No, that's absolutely right. And so from a lending perspective, that's complicated, right? Because I believe all lenders want to make great decisions and don't want to ever put a borrower in a bad situation. But financials are so different in every different. I mean, there's so many different businesses out there that they might be looking at. And so to then kind of hone in on the financials and really understand, okay, what are the key performance indicators we should be looking at in this space? What are the industry averages? What should I expect? In some of those, whether it's based on the types of runs or based on the number of trucks, or what should that maintenance look like? What does the insurance look like? I mean, you can't compare that to a different industry and understand that set of financials that you're looking at. So if I'm looking at a different type of business every day, that's really hard to wrap my head around it and feel confident that I can make a good decision as a lender. And so I think that that's why a lot of them, aren't necessarily, not that they're not interested in this space, but don't feel comfortable lending in this space.
I think a lot of them hear trucks and they go, they're scared, right? A lot of
That's
people
true.
are scared of trucks, right? I got a lot of buddies and a lot of banks around here that are more than comfortable handing out cash to us if there's real estate involved, right? But if it's got wheels on it, they're not as happy about it.
Well,
I think to your point, John, to take it back to when we played golf in Orlando, and I talked about it, I think on one of the last ones we did this, right? When you find a expert, your buddy Jimmy said it best, when you find an expert in their field doing what they do, it is magical to see. We have found banking experts that are SBA experts that also have wrapped their head around this very confusing world of line haul contracting and have said, okay, we're focusing on this and we're going to be really good doing this. And that's why I was excited for this phone call today, or this Zoom call today, whatever we want to call this.
Schwanda, when we publish the video, we have your permission to put your contact info in the description?
Oh, absolutely. Please.
And if folks just want to call you to learn more about SBA, you're okay taking those calls?
100%. I would love for them to call because, as we mentioned earlier, it is about starting the conversation and building a relationship. It will be much easier for me to help them if I have an understanding, and a little bit of context to what they're looking for, where they're coming from, where are they in the process.
If they're looking to sell, if they're thinking about selling, are you wanting them to contact you? Or is that too much hassle, too much work, anything on your end?
Yeah, no, I mean, we're never going to say that's too much hassle or too much work. I mean, that's what we're here for. I don't often have buyers. So if the seller is calling me to say, hey, do you have a buyer? That's not that's not what we do. I don't typically have buyers. Now, I might have had a conversation with somebody who maybe a deal fell through, or, so there's a possibility I've had some conversations or met somebody at a show. And so, for sure I might have that in the back of my mind. But if a seller wants to call and say, hey, how can I be prepared to sell? What would you need to look at? That is a great conversation for us to have with sellers, to let them know, what are the documents to be prepared with, and be sure that you're prepared to lay that out for the borrower. It shouldn't be a secret. If there are things, that you're using as, I guess, some owner's benefit in your business, and you want to talk with your accountant about how do we clean this up? How do we make this, the most attractive for sale? those are conversations that a seller needs to have before that ninth hour when they say, okay, I want to do a deal now. And so think about what your books look like, what's running through that P&L, or be sure that it is the most attractive it can be from a valuation perspective so that you get the most out of your business. I mean, you put blood, sweat, and tears into it. We also want the seller to feel like they got a really fair price when they're ready to sell.
It's always one of my biggest, makes me smile the most, right? You'll hear from Linehaul owners, you'll hear from the P&D side owners, but you'll hear from contractors in general. I'm not making any money this year, blah, 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 blah. They show you their books, right? They get into their system, and then you look at their ad backs at the bottom, and they got like the lake house office and the 3 company trucks that are the personal vehicle. Like, they got the company truck and the company SUV and the company car. And I'm like, yeah, you're not making any money, are you?
Yeah,
9 cell phones.
that same person who's not making any money when they're ready to sell sure can show a lot of profit.
Ooh, like I said before many a times, and I'll say again in Dallas, next week before probably we get this out. But I always laugh when people try to value a business on a number, on a multiple of EBITDA, because depending on who's asking, I can make EBITDA look a whole lot different.
And that's an important point from a seller's perspective. Be sure that you can document those ad backs. I mean, those ad backs they are legit, owner officer benefits. Okay. And so those they're eligible to add back and should be added back as, but you have to be able to document them. So, be sure that, if there are those things that you're running through your business, have that conversation with your accountant. That's why you need a great accountant to say, okay, yeah, we've documented, X, Y, and Z will not be incurred by the new owner. And so those are legitimate add backs and should be used, in the lending process and in the valuation process.
Schwanda, I want to respect your time. You've been so generous to sit down with us and share your knowledge. So first off, thank you. Thank you so much for being here. But we are looking forward. We're recording this the week before the Linehaul Summit, so you'll probably anybody watching will have come and gone. But I know you're going to be at events in the future, and we love having you there. David, thank you too for being able to find the time today to join us.
We only got a little bit going on this week, right?
We're in absolute hair on fire mode on our end this week, Schwanda, with the event.
I am sure. Sure. Thank you for having me. I appreciate the opportunity. It's a great conversation.
Well, thank you, Schwanda. Be well, everyone. Always great to have you here.